ForexDayBreak podcast, where we trade the Forex market with you. Entry, target, exit, and stop loss levels are covered when we walk you through every trade made in the show. 5% of Forex traders are profitable, and you can be among the winners. If you wish to find out profitable trade signals in the Forex market, ForexDayBreak is the show for you. Now, let's begin today's episode.
Good morning and welcome to episode 83. Forex pairs in this episode are EURGBP. We take a look at how are things after the powerful ECB move last week. Pound dollar, we see an opportunity to trade this pair to the downside for the next leg down. And pound yen, an expanding triangle formation is seen on the charts, and this gives a very good trading opportunity to the downside. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Let's begin with EURUSD. So, Friday, NFP figures, a little bit disappointing price action. The release, the NFP figure was positive. I think 200,000 was the expectation, 211,000 was the real figure they gave, and based on that, quite a muted reaction. But like I have talked before, news releases don't really move the markets. This is not a reliable premise to trade on. So last week was a great example. First, the ECB release resulted in a 465 pip move, very fast, a very powerful move. And in my opinion, it should have been a negative for the euro, but this was positive, clearly positive for the euro. And then after the ECB figures on Friday, non-farm payroll numbers, which was highly anticipated as well. It is said that this was the most important NFP release in the whole year. Of course, this has been said almost all of the non-farm payroll figures. And this is regarding the rate hike, which is expected to happen in December. So in a couple of weeks, less than a couple of weeks, the Federal Reserve should raise benchmark interest rate in US. So if this would be the case, that this non-farm payroll was the most important in the whole year, how come there was so small reaction on the currency markets? So don't trade the news. I would propose that Elliott wave principle is the best way to forecast the markets. Of course, there is a lot of other options and supporting indicators and trading systems, strategies to trade the markets. But in my opinion, Elliott wave principle gives you the best tools to see into the future and anticipate these kinds of moves. So we were anticipating this move. I wasn't exactly anticipating a move this powerful. I was expecting 108.3 level, maybe a little bit higher, but we got almost to 110. So this was more powerful than I was expecting, but I was expecting a powerful move to the upside. And I have stated this in this podcast many times. So we have the powerful move, and then the NFP, a little bit disappointing, smaller reaction. The price now 108.6. And there are a couple of options, I think, where the market is going next. My preferred wave count, my preferred view is that we have completed the minute wave 4 correction. The powerful move from ECB was the C wave of this correction, and now since then we have declined. So almost 110 was the high on Thursday, and since then we have declined 150 pips approximately, or 130 pips. So I'm thinking EURUSD will be going towards new midterm lows. The next larger move, in my opinion, is going to be to the downside. But at this moment, this is a little bit unclear. The decline from the high of the fourth wave doesn't look impulsive at the moment. But of course, there is the NFP figure which resulted in a sideways or up and down price action on, let's see how many pips this was altogether. So approximately 100 pips was the range that the non-farm payroll release got this pair moving. So next move, in my opinion, is going to be to the downside and a continuation for this larger downtrend. We are one wave short of full 5 waves sequence, and there's limited upside according to this wave count. So you can see this red line in my chart. This is the low of the first wave, and in Elliott wave principle it is not allowed that first wave and fourth wave will overlap each other unless there is an ending or leading diagonal triangle in play. So like we saw on a smaller scale, this fifth wave, we can draw it here actually once again. So the fifth wave of the third wave in my wave count was the ending diagonal triangle. So from the 108.3 we see overlapping 5 waves. Perhaps this is the fifth wave or 5 wave structure. There can be, of course, other counts that makes it go a little bit longer. My wave count ends it in here, and then an ABC structure finishes the minute wave 4, and now next move should be to the downside towards new lows. We should be able to reach below the previous low. About 105 is the previous low. So 104 handle will be the result of the next decline if this wave count proves correct. At this point I wouldn't trade this pair since there is another interpretation of this structure. So the powerful move from the low of 105 all the way up to almost 110 can be a wave of the correction, and if we move higher and continue higher on this structure and in this pair, and we start to approach this first wave low, which is about 110.9, then this can be 1 degree higher correction, or then we are dealing with a leading diagonal triangle pattern. So few options here, but my view is that we are going to see more downside on EURUSD next. Okay, let's take a look at pound dollar next. In pound dollar I have labeled waves 1 and 2 completed, and next we should see more downside. And the third wave, actually it is the third, let's label here, the third of the third wave should be very powerful wave down, the most powerful in the whole sequence. And we have a sell stop order in pound dollar, so sell stop at 1508, stop loss 1512, take profit 149.1. So we are counting on pound weakness again. Last week was quite powerful for the pound. This was due to the ECB release. This caused pound to move also higher. Now since we have the powerful big releases done, we can expect quite normal market conditions and more downside on pound dollar. Next, let's see euro pound. Same here, the ECB release made this pair go up like a rocket ship, and I was expecting a 0.72 figure, and this is what we have. 0.725 Let's see the absolute high. 0.725, yes, is the absolute high. And this was anticipated way ahead of the ECB release. So in this podcast, I had been advocating that the decline from 0.7196 looks corrective, and I labeled it as wave B. So wave B low down here. And then I was expecting a 5-way structure and a move towards 0.72 handle, maybe a little bit higher. And this is exactly what we have here. But at this point, I have labeled this as concluded minor wave 2, but we can maybe expect one smaller wave higher, maybe a little bit higher than the 0.725 top we have now, so maybe 0.727 or something like that. The price action at the moment is not telling us clearly if we have started the next wave down or can expect one more move higher. But still the upside, in my opinion, is limited. We are dealing with a correction here in my preferred wave count, and the next larger move should be to the downside. Okay, let's see pound yen. So in pound yen we have seen a powerful decline from the 188.78 high. I have labeled this as a wave 1 of minuet degree, and then we have a wave 2 I have labeled ended at 186.22. We can see there's an expanding triangle here, so we can label or draw it here. 3 wave structures on an expanding triangle formation, which is near or at the top right now. So this gives us a very good trading opportunity to downside. We have entered a sell stop order, so 185.95 sell stop, stop loss 186.25, take profit 181.8. So take profit level is just near this Fibonacci expansion level, 100% Fibonacci expansion level. So we are expecting next larger move to be to the downside. We may get little more upside before that. But once this decline resumes and gets going again, we can expect third wave to reach at least to the 100% Fibonacci expansion level. So this would make it equal in length with the first wave, and this is usually the case with the third waves. Usually they are longer than the first waves, but now it is conservative and more safe to expect it to be as long as first wave. So 100% Fibonacci expansion level is our target for the next wave down. Okay, that's all for today. Visit the show notes at ForexDayBreak.com/83, and let me remind you that you can get this video analysis, daily trading signals, weekly future trades video, books, and access to my trading system when you subscribe to my basic membership. Membership fee is only $10 a month, and I have a 14-day free trial for you to test out my service. You can cancel with one click, so this is truly a risk-free offer. Go to ForexDayBreak.com/basic and sign up today. More trades tomorrow, happy trading, and I will see you next time. Bye bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.ForexDayBreak.com. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.